welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero. Let's dive in. Craig, welcome to the show, man. We've been talking about doing this for a long time.
We have.
Finally happy to have you here.
Yeah, good to be here. Thanks for having me.
Yeah, you're welcome. So, recent free agent, right?
I am. And just my first podcast too. So this is going to be exciting. So looking forward to chatting with you.
Oh my gosh. Yeah. Well, you also being your first podcast, this is the first show we're doing where we're in my studio and you're the first one here. So I appreciate you being a part of the first.
Yeah. Glad to help break it in.
Nice. Well, again, before we dive into the episode and what we're going to talk about today, I would love for you to give the audience and, our listeners a little bit into you and your background, kind of where you come from.
Yeah, sure. So, I'm born and raised in the Bay Area in California, outside of San Francisco. Went to school in Colorado. Go Buffs! Excited for for Coach Prime to come this year.
Yeah.
It's been a while. But I got my start in financial services industry in the late 1990s. So I've been doing this for about 24-ish years now. Got started in 98 working for Charles Schwab. This was back when day traders first started kind of coming to the forefront, .com 1.0, market storm, they used to call it. So super exciting back then. So I worked for Schwab for until about 2007 when I made my way over to Barclays Global Investors, which was the asset management arm of Barclays Bank in the UK. They had this product called iShares that was probably about 8-10 years in existence at that time. And so I started doing that in 2007, covering institutional investors. Barclays was bought by BlackRock in 2009. And I stayed with BlackRock all the way up until early last year. And my focus over there was on iShares. I spent 5 years covering institutional clients. So I covered hedge funds, I covered asset managers, pension foundation, endowment clients. Spent a lot of time educating clients on what are these ETFs, what is an ETF, how does it work, how is it not an EFT, was some of the common things that we got even back at then. But certainly over those 15 years that I was there, ETFs became much more mainstream. Spent about a year and a half actually managing the product, so I got into the sausage making, if you will, of how ETFs work, how they operate, how you trade inside ETFs, how do you manage them, how do you track an index?
Yeah.
What are some of the decisions that are made by a portfolio manager? We used to say that it's not just set it and forget it, push a button and off you go play golf, but there's actually some things that happen inside of an ETF that you actually have to do.
Yep.
And then after that, I went back to the client side, and I spent the last 8 years of my time at BlackRock covering wealth advisory firms. So I worked with the home office research teams, home office portfolio management teams, at many of the independent broker dealers, some of the direct firms. My team worked with a lot of the big wires and private banks as well, and providing more education on ETFs. How do they work? How do they fit into client portfolios?
Yep.
We did a lot of portfolio allocation, portfolio implementation, asset allocation conversations. And then in early 2022, I left BlackRock and went into the crypto world.
Okay.
With a company called Circle.
So before, funny, we'll probably say come full circle at some point, but so there's some joke in there. But before we go into your crypto journey, then how you got into that, man, what a big background, or what a wealth of knowledge, pun intended, to bring to what we're going to talk to today. But where I'd like to kind of linger a little bit is on that traditional background, right? You've mentioned, ETFs. I think they're called ETPs. Maybe they're not easy. No,
you can call them ETPs. Yeah.
There's so many different. It's the same thing. So we've seen. I think we're going to talk a little bit today about kind of where we see digital assets today, or crypto assets, and we're going to talk about maybe some of the similarities of where the ETF industry was, and then we're going to dive into a little bit of, where do we think things need to go from here, and we can use kind of what you're bringing to the table with your experience, to what does that even look like? Because I think a lot of investors now are asking that, like, where do we go from here? There's so much that has happened, and we're going to get into that as well. But I think I get really curious too when I get people like you who have this robust background. Like, you could have just sat pretty at BlackRock. Like, you're sitting there working. You have a great portfolio of value added to different business lines for many, many years. So before I go into like how you got into the space, tell me the why behind coming into the crypto space.
Well, I always had a bit of an interest in crypto. These were conversations that came up as I talked to my clients. What are you hearing from your advisors?
So, and who are you when you say my clients? Like, who are? Give us some examples.
Yeah, so the clients that I work with, I think about the wealth space, for example, where I was focused in the last 8 years or so at BlackRock. These were the home offices of wealth management firms. And when I say the home office, I mean there's a centralized team that creates the products that sit on the platform, that works with different asset managers around the ecosystem, from mutual funds to ETFs, alternatives. They provide the products that then go to different financial advisors. Financial advisors will call the home office and say, hey, help me out in understanding this product or that product. I'm looking for this exposure. I'm looking for that exposure. And then they have, deep conversations with these professionals that are deeply ingrained in what the products are, how do they work, how do they fit in portfolios. And those are the teams that we were talking to. And so these conversations, it's like, hey, what are you hearing from financial advisors? And for the better part of the last, 10 years or so, it's everything from, how do I get emerging market allocation? How do I target international exposure? How do I get yield on my cash? And when cash was, federal funds rate was practically zero, right? Yep. To, tell me about marijuana ETFs. And then this stuff, Bitcoin, you go back, 6-7 years, talking about what is Bitcoin? What is crypto? And so knowing that there was a lot of these conversations happening, I mean, there wasn't a lot of product out there, but it was something that clients there, that financial advisors, and of course their end clients, were asking their financial advisors, what is this cryptocurrency stuff? How can I get access to it? And then they were in turn talking to the home office. And so these questions started to come up. And so I started exploring a little bit more about what is cryptocurrency. And it got me really intrigued. And as I learned more about this, I realized, this is a space that can really transform the financial services industry. And it could even transform the global economy in ways that we haven't seen in a long time. Mm-hmm. And so just thinking about what the opportunities are for the next stages of growth within financial services, the business that I had been in for 20 plus years, I thought this is that next wave of growth. When I got into ETFs, it was dominated by mutual funds. And slowly over time, ETFs caught up or have made significant strides in catching up to where mutual fund assets are. ETFs are now as generally accepted as mutual funds are. And I see that there's a possible opportunity that crypto and digital assets, you can go beyond just cryptocurrencies, has a place in client portfolios, it just needs to be more and more accepted. And I think there is room for that growth to come. And that was what attracted me to move over to Circle and get into this space.
Okay. Wow. Okay. So there's a lot of high level things there, a lot of inspirational things. And I think a lot of people probably, they get lost in themselves when they think about, okay, transforming the financial services industry, creating a new global economy, right? Those are big things. Oh, yeah. So I think one of the struggles we've had is when we say things like that, a lot of people kind of get it like from an inspirational standpoint, but then underneath that, like, okay, what are the details underneath that? And I think that's where we're still struggling a little bit. And I think where the industry struggles a little bit, really, how does that get done? And like, why is that even important? And there are so many answers to those questions. So, but I don't want to go on there, but I think the thing that also intrigued me where I want to stay on for a second is, so you said 6-7 years ago, your clients, these home offices, these wealth advisors, and it sounds like your clients were the decision makers at these firms, the CIOs, the compliance officers, the people that were setting up for financial advisors and wealth managers, asset managers to be able then to go to end clients and give them what they were asking for or what they needed.
That's correct. Yeah.
Okay. Because I think a misconception then is that Bitcoin is new. Bitcoin or Bitcoin digital assets, these conversations only started happening in the last couple of years. Mm-hmm. So what you're saying is now, maybe even 6-7 years ago, your clients were already asking you the questions kind of about Bitcoin?
Well, I don't necessarily think they were asking me the questions about Bitcoin. They were saying these were conversations that they were having.
Well, okay, so there you go. Yeah, that's even better though. Clients were bringing it to them.
Clients were bringing it to their attention.
Yeah.
Correct.
Okay.
Yeah. But I do think that really within the last 2 to 3 years, it's become much, much more mainstream in terms of what those questions are. And even though I've been a little distant from those clients after leaving BlackRock and going over to Circle, I know that from anecdotal conversations that I had with them, that given the news that's been out there starting kind of May of last year, if you will, there's lots more questions coming up.
Mm-hmm.
When you saw Terra and Luna blow up, when you saw Celsius and Voyager blow up, now with FTX and a couple months ago, there's just lots and lots of questions now coming up.
Yeah.
And I can only imagine what some of those conversations are like, from clients to their financial advisors to research teams now.
Mm-hmm. Yeah. So again, we could take this go forward, but now, okay, thank you for taking some time as to the why.
Yeah.
So you see this opportunity, you're having these client conversations over many years. You've been through in your traditional experience kind of that evolution of the ETF industry, mutual funds to ETFs. So you see a lot of different types of opportunity. So what's the next step for you? So you leave BlackRock and what happens?
So I left BlackRock and I went to Circle.
And what's Circle?
Circle Internet Financial. Circle is the providers of USDC, and USDC is the second largest stable coin. It is an asset-backed stable coin, so different from algorithmic stable coins like Terra and Luna that derive their value from each other. The value is derived by what's actually inside of it. So when I kind of think about it, I kind of think about it as a tokenized money market fund, if you will, right? What's inside of Circle, as publicly disclosed on Circle's website. I'm no longer with Circle, but it's approximately 80% backed by sub 90-day treasuries. The other 20% is sitting in cash, and it's sitting at major financial institutions like Bank of New York Mellon. BlackRock is a manager on the treasury pieces of USDC. And so looking at what USDC was, and that it's actually a cryptocurrency that is backed by something very tangible, easily understood. I went over there to sell a product called Circle Yield, which was at the time yielding 8, 9, 10%.
And when you say at the time, when was that?
So this was in March of 2022 that I joined.
Okay.
I joined Circle. And looking at it as, for the last 10 plus years, it had been, how do I earn some income on my cash by, financial advisors, institutions, et cetera. And you really you had no yield because Fed funds were pegged at 0. And here's an opportunity to bring to market a product that investors could, what I thought, easily understand, and generate a decent return, and at the same time get people involved in crypto. And so that was what attracted me to Circle, was to sell this product, Circle Yield.
Yeah. And USDC is important to the space, or other, asset-backed stablecoins like them. So Tether's the number one. There's a lot of things we can go into about Tether, but, you have BUSD. Also, we can go into a little bit more. But when it comes to a quote-unquote safer asset-backed stablecoin, there really wasn't anything in the crypto markets before USDC, right? And I think that's where it plays an important role in the crypto markets, as do all stablecoins, because you can't just have everything be as volatile as they are, right? So they are very important pieces to mature markets and a mature market structure. So stablecoins are going to be here, whether people want to use them or not. And they're important because, especially if you're in the crypto space, and I think probably this is what you guys saw, when you're in, you don't go back to dollars, right? When you're in the ecosystem, when you're in DeFi, when you're spinning up nodes, when you're engaging with any of these decentralized applications built on top of the base layer protocols or the networks, you're earning in the native, tokens, right? Whether they're utility tokens, security tokens, that's different and depending on each protocol. But you don't go off of crypto because there's so much friction still.
Lots of friction
for the on-ramps into the crypto ecosystem. And again, good reason. That's still all being built. So USDC, I see, plays this important role in the ecosystem. It makes it to where people can have a trusted stable coin that's backed by, the US dollar. That's why it's called USDC, right?
Yep.
So the biggest question I think I have, and I think probably all of your investors had, was like, how are you generating then? If you're backed by, treasuries that, have these level of rates, how are we getting the 8 to 9%? So can you give us some insight as to, what was Circle Yield doing?
Yeah. So Circle Yield was basically it was a Reg D private placement offering.
And what does that mean? Tell us what that means.
So it's open to accredited investors only, similar to, traditional, hedge funds or private equity. You have to meet accredited investor status. Yeah. There's multiple definitions of how you become an accredited investor.
Yes.
And so what it would be is if you had a minimum of $100,000 of USDC, and I guess I could take a step back here. And in order to mint USDC, you had to take US dollars and send that on chain, whether that was directly to Circle through some of the banking counterparties that they had, or you would go through a Coinbase, or you could go through a number of other firms to take and convert USDC, your US dollars into USDC via Circle or via Coinbase through the Center Consortium. That was the agreement between Circle and Coinbase because they created USDC together. But anyways, so once you had your USDC, you would actively lend out your USDC through counterparties of Circle and generate yield back based on how the USDC was then lent out by that counterparty.
By the counterparty, yep.
And for traditional financial, to draw a parallel to traditional finance, it's basically like securities lending.
Yep.
Which is where you have securities, you have stock in Apple, Google, Microsoft, whatever, and that gets lent out to market participants who need to borrow that stock in order to, facilitate whatever they want to do. Normally it's short selling. And they pay a fee to borrow that stock. Same kind of thing here. You had market participants who transacted primarily or that held Bitcoin. They didn't want to sell their Bitcoin to generate dollars to fund their operations, but instead they would post their Bitcoin as collateral and borrow USDC.
Yeah.
So borrowing that USDC came at a cost, and that cost was passed through the counterparty back to the lender of USDC through Circle and Circle Yield, and that interest was paid to that that end client.
Yeah, and thank you for going into a traditional analogy, because I think especially when you read traditional headlines, and I think for someone who isn't an active investor, who doesn't manage their own wealth, who isn't a trader, doesn't know a lot of these things and how these inner workings happen. But this is common practice, right?
Yeah.
Lending out securities. I know, especially, when I was practicing as advisor between 2014, 2019, low interest rate environment, effectively zero, right? So sometimes maybe even going to negative rates. You had a starvation for yield.
Yep.
You had, goals that you had to meet, and there was no safe way for a lot of clients, especially ones that had lower asset values, where they could comfortably, achieve those goals. So it caused people to think differently. And I just remember when I was sitting at Schwab or when I was sitting at Merrill, this was a common practice. We would get offers daily for our clients who had large positions in an Apple or a Google or whatever. And they would say, and people would trust that Schwab or Merrill, they were the counterparty. They were the ones then going out and lending. But then past Schwab, I think what people don't understand is that they then go out and lend the securities elsewhere. And so it's common practice in the industry.
Very common, yeah.
So, and that's where I think it's important to stay there for a second, because a misconception is that this is new. This only happens in crypto. And I think some of the hits that crypto has taken for these types of practices is a little unfounded, and people kind of latch onto it because it's easy then to beat crypto while it's down. And when you take a step back and realize this is just traditional financial practices that we've seen in the world for decades being copied into this space.
Correct. Yeah, you're absolutely right. And securities lending is something that has gone on for decades.
Yep.
Schwab has
and has gotten other people into trouble.
it did get some firms in trouble in 2008, for example.
Yep.
But name the large asset manager, they all have a securities lending business. Schwab has one, BlackRock has one, Vanguard, State Street, you name it, they all have a securities lending business. In fact, if you have a margin account at a brokerage firm, your stocks are lent out.
Yep.
You sign what's called a hypothecation agreement, and therefore your securities are lent out.
Mm-hmm.
You may not get any return on those, but you're not an institutional investor. But institutional investors, pension funds, foundations, endowments, large institutional investors, if they have a large position in stock or in an ETF, those actively get lent out through prime brokers and hedge funds, institutional traders that are shorting, and of course, long and short makes a market.
Yep.
They're actively borrowing those, and they're looking for good borrow rates because they're in the business of speculating.
Mm-hmm.
In this case, with these end investors in crypto, they were borrowing USDC to fund their operations. They're, if I paint this and come with a broad stroke, these crypto native companies, so companies that are traditionally transacting in crypto, they believe in crypto, they're in a crypto business, a Web3 business, whatever you want to call it. They have this belief that Bitcoin's going to the moon. It's here to stay, right?
Yep.
Whether or not you believe that, that's a different story. But that's their belief. They don't want to sell their Bitcoin.
Mm-hmm.
They will post that as collateral in order to borrow USDC. And so that was what was backing the Circle Yield product. The collateral was 125% collateral by Bitcoin.
Mm-hmm.
So if you lent out $100,000 in USDC, your collateral that you had was $125,000 of Bitcoin.
Mm-hmm.
And that was the security that you had to, where, depending upon where Bitcoin went. If that price went down, the counterparties had margin calls in effect. They would go back and they would, bring that back up to 125%. So, when I looked at it and I understood more about that product, this was a very attractive offering, just needed to get over the hump of this is crypto, and crypto native companies got it. But for us, what we're hired in to do is to go and bring traditional finance into this.
Mm-hmm.
And that was hard. I mean, we definitely got some, but then as rates started to rise and the crypto market started to experience its speed bumps, then that's when some of the issues happened for products like Circle Yield and some other lending options that were out there too.
Okay. And so take us through now to the kind of the end of the journey with Circle.
Yeah.
For you.
So, unfortunately for me, crypto winter hit, kind of starting in May of last year, through the summer. And then in the fall, Circle, they cut 4% of their staff. They closed up Circle Yield.
Yep.
And, I didn't have a product to sell anymore. So,
yeah.
So that, as you said, I'm a free agent. So that's why.
I'm sorry that you're going through it. I know, and we met, what is it? I think when did we get connected? We probably got connected early 2020 or late 2021. I want to say.
Yeah, about there, right? Actually, it might have been early 22, right as I got to Circle.
You know what? Yeah. So it was early 2022, kind of just before Luna hit, actually.
Yes.
Now I'm remembering. So we got connected. And, as players in the wealth management space, we're actively looking like, how do we continue to make our product, what we deliver to clients, the highest quality, kind of that institutional quality, right? So we're trying to figure out how to integrate USDC because we see USDC as a pivotal piece to a native crypto portfolio.
I fully agree with that. I think USDC, I think, Circle has done it, and this is my personal opinion. I think Circle has done it right with what they've built with USDC.
Mm-hmm.
I feel that they've, put the right thought and the right due diligence into the product that they've created with USDC. I see the applications more broadly outside of just investing in finance. I mean, just the ability to transfer funds around the world at the speed of the internet is what the line is that Circle uses, right? I see that as, revolutionary. That's outside of just traditional finance, but that's how, the economy could start to move some way in the future. But yeah, I believe in what Circle's done with USDC. I think they put together a good product.
Yeah. Okay. So let's talk a little bit now about, we've gone through the journey. We're currently where we're at. So where we're sitting at right now, SBF, and we have all these things going down. Crypto had probably the worst year in its history. It's gotta be there. And everyone in crypto world wants to debate what's been worse. But I think relatively speaking, this has got to be the worst because there's more eyes, there's more people, there's more dollars. It's a bigger market cap. It's having a more outsized effect than previous hits. So talk to us a little bit about where you see things need to go from here, as opposed to us just kind of expounding upon all the crap and the fraud that we've been going through. Let's kind of talk, okay, we've gone through it. Where do we need to go? What do we need to focus on?
Well, I think the industry needs, and I think you'll find this at just about every crypto firm, is there needs to be regulation. And I think in order for crypto to take kind of that next inflection point of its growth, there needs to be some regulation.
Mm-hmm.
You know, who is it that's going to regulate these different coins that are out there? Is it going to be the CFTC? Is it going to be the SEC? Who's to regulate some of these companies? You know, there's bills in front of Congress right now that need to be voted on and passed that will dictate where this goes. And so, you know, in my conversations, so when I was at Circle, you know, I was focused primarily on institutional asset managers, institutional firms, asset managers.
Give an example. What would be an example of an institutional asset manager?
Whether they were, you know, think of large RIAs, for example, like yourselves, or large family offices, or institutional trading firms.
Okay,
you know,
great. Thank you.
Yeah. So, you know, I've met market makers that are, you know, involved in, you know, stock and ETF trading. They know they need to get into digital assets. I've met with hedge funds that are getting into digital assets. There are other large asset managers that want to get involved. And there's other large asset managers that are very public about what they're doing. You know, Fidelity probably being the biggest example. You know, they've got a growing Fidelity digital asset business. But through my conversations that I've had, I think the biggest thing is regulation. People need to know that their money is safe, their money is secure, that there's not going to be this fraud out there. I mean, I'd rather have, you know, investment risk, right? You can't control whether the coins go up or coins go down, but at least you can control for things like fraud.
Yep.
And I mean, you're not going to always control it, but you can certainly put a lot of guardrails in place that is going to keep things much more safe. And as these, you know, as regulations come, then it's going to provide more safety for these bigger firms to start to get involved in it. And I think as the bigger firms really get involved, then, you know, people are going to start to come even in mass. You know, there's already a lot of people here now, but there's more that can come.
Yeah, absolutely. And I think the counter argument to regulation coming, how it being the catalyst, is, well, what has it done so far for regular markets? Doesn't fraud happen in regular markets? Hasn't there been even more fraud that happened in regular markets than this? Aren't we trying to go away from the old system and kind of build this new system? And I guess it sounds like you and I are similar in my response to that, is that some is better than none. Zero, like even if we get an iota of regulation that helps protect, and again, we can debate on whether or not, you know, the people in place right now are actually thinking about protecting versus other things, but regulation will bring in some protections. Yeah. Will mitigate at least, and you want some better than none, because right now to fully rely on code is law or the technology, we know that's not working because of what we see happening in crypto land with the scams, with the loopholes, that it's a very attractive space because there are no regulations, because there are no oversight committees.
Yeah. Well, I think, you know, I mean, yeah, you're correct. You're never going to eliminate all the fraud, right? Regulations didn't prevent Enron. They didn't prevent WorldCom. They didn't prevent Madoff, right? But
what it does prevent is it prevents 20 Madoffs. It prevents 30 Enrons.
Exactly. You're exactly right. So there's always going to be some bad actors out there, but it's going to curb as many bad actors as there could potentially be.
Yeah. What are we learning right now? We're learning that what's behind all this, you know, what's happening with, like, currently the next shoe to drop that possibly could happen is the DCG Genesis and Gemini and what's happening there, right? What do we see in the middle of all of this? It's the same thing we've seen play out in human history, not just the most recent history. It's human greed. And I was like, when you see all of these quote unquote smart people who've come into the space and so much trust was instilled in them because they had these, you know, enormous backgrounds in traditional finance, or they had been through certain experiences. And we think, okay, because they've been through that, they'll probably make better decisions. what we're learning is the decisions they decided to make while going through those humps that we've talked about were probably not the best decisions.
Right.
And so it all comes back to this human greed. And no matter how much regulation you have, you can't always protect against all of it.
Yeah.
And that's where, but it's better than none.
Yes. And certainly that's what I think the deregulated nature of it, or unregulated nature of it, is what's drawn a lot of the quote unquote greedy. I don't want to call them greedy. That's not the right term, but I think that's what's brought a lot of people to this space, is because there was a lot of easy money to be made.
Yeah.
I don't necessarily think the easy money has probably been made.
Yep.
So maybe there's an opportunity for more steady money to be made, more risk mitigated money, let's say.
Yeah.
But you're always going to have people that are trying to speculate and make markets. It's just, maybe it's just not going to be as easy as it once was.
Exactly. Well, and I guess, I didn't want to say that everyone in the crypto space is a greedy human being.
Right.
It's more just to say that we are human. Everyone is a human being. And in every single market, every single industry, there will be people that are there because of that human greed.
Exactly.
And that's not to say that they shouldn't exist. And so I think that's kind of one of the hurdles we struggle on helping people overcome.
Yeah. It's
just understanding that concept. And I think we have, as humans, we allow for some of those things to happen in our traditional worlds now, and we kind of have to other places, but we don't have that for crypto yet. Like, there's no trust, and any of the trust that we built up. And when I say we are part of this crypto world, even though we are traditional product or traditional players. We're a part of the space, and we want the space to grow in the right way. But that trust is gone. 99.999% of it.
Yeah, and I think it's set the industry back, months, if not years in terms of growth.
Absolutely.
It's going to take a long time for investors to come back. There's a lot of people that got burnt. Look, there was a lot of people that got burnt in 2001. Right?
Yeah.
And it took a long time for those investors to come back. Probably going to take a little bit longer in this space.
Yep. Well, I don't know. I'd actually probably go the other side of that. I would say it would probably happen quicker because it depends on the regulation. Obviously, we've talked about it a little bit. But if there's sound regulation, I actually think because of the technology, because of the way it's been introduced, because of what it can do, I would probably take the other side of that and say that it will happen faster. The recovery will happen faster, just like the downturn happened exponentially faster and more publicly. It will happen not just as quick, but it will happen faster than we probably would expect it.
Yeah.
But interesting. So, give us your thoughts a little bit though. Like, what do you see playing out? So continue along that road actually of where do we need to go from here? We've got this trust that's been destroyed. So from your point of view, what else needs to happen besides regulation?
I honestly think that's kind of the biggest thing, because when you have some additional oversight, then that can bring back some trust.
Yeah. And
as you were just discussing, trust is the biggest thing that needs to happen. People just need to feel that their money is safe and secure. But I also think that education, this is the time for education right now. I draw lots of parallels to the ETF industry. And, like I said, when I started in 2007, it was a lot of basic education. What is an ETF? How does it differ from a mutual fund? And then when the financial crisis in 2008 hit, you had all this press about weapons of mass destruction, right? ETFs were going to destroy the financial system. And it went from 2008 probably all the way up until I think it finally got put to bed during the pandemic.
Yeah.
It took that long for people to realize.
You think?
Yeah, no, definitely. When you saw what happened in spring of 2020, in March and April, the volatility in the marketplace, ETFs performed exactly as they were supposed to perform. And they did it in 2020. They did it in 2017, 2015, 2011, 2008. They did exactly what they were supposed to do. And I think it finally put to bed this notion that they're going to destroy things. It took a long time.
Wow. Okay. And where did it start too? When did that start? It didn't start in 2008. So first SPY start was created when?
First ETFs came out in the early 1990s.
Early 90s, right?
And then, iShares kind of got their start in the late 90s with the Webb's products. And then really 01, 02, 03, 04 was when you had kind of the first growth of ETFs. But I think 08 was kind of that inflection point. And I think a lot of it was around transparency because, ETFs post their holdings every single day. Mutual funds post their holdings quarterly. People wanted to know what was in things. They started to see, returns that they didn't quite expect around, mutual funds, for example. They were, fixed income mutual funds were down, for example, because they took a lot of credit risk and nobody knew that.
Yeah.
ETFs, you could see exactly what was in there. They were indexed. They tracked particular indices.
So let's pause there and now say what the evolutionary step of these assets is that we're going to move. So we had this evolution from a transparency standpoint from the mutual funds to the ETFs. So the quarterly attestations to the daily.
Mm-hmm.
We're moving towards real time.
Yeah.
For these assets.
And I think that, that's where.
But why is that important? Because of what you just said, right?
Because people need to know what they own. And I think, as we talked about providing, as we were educating people on what ETFs are, I think the number one thing was it was what's your exposure, know what you own.
Mm-hmm.
And to be able to know what's in there on a daily basis, or in the case of where technology has gone down on a real-time basis, you know exactly what it is that you own.
Mm-hmm.
And that's vitally important right now.
Mm-hmm.
So you're not going to get blown, nobody knew what FTX owned or didn't own.
Yeah.
And that was a huge risk.
Yeah. Well, and I think too, we talked about this a little bit before, especially in FTX's case, and what we're seeing in a lot of these fraud cases is the argument then is, well, if blockchain, DLT, and these decentralized networks are all about transparency, how come nobody saw this? Which again, is a question. I don't know if it's the right question. So here's the thing that I think people don't understand yet. Sure. And this is where I try to help educate advisors, anybody who's willing to listen really. Transparency, yes, full transparency. But what happens when you get full transparency? You now have access to so much more, exponentially more data.
Mm-hmm.
And then again, because it's decentralized, you can create more data, right? So more wallet addresses, more like I can have an infinite amount of wallets if I wanted to.
Yeah.
But then I can have them all be created on different IP addresses. I can do VPNs and I can create all this wow, I can't speak. So I can obfuscate. I don't even know if I said that word right, but I can make it look like things, and it makes it hard to see. Even though I can see everything, yes, everything's fully transparent, but how do you know where to look? We're still figuring out the standards, and that's kind of, I think, where the dangerous things are right now.
What does all this data mean that you're getting?
Exactly.
Right. Yeah. You need somebody to help distill down that data.
Exactly. So,
and what does it mean? What is the end conclusion about this?
Yeah. So when people say, "Well, you should have seen everything at FTX before," like, well, no, you only would have seen it if you knew to look there, right? Because it was all there. And how do we know it was all there? Because again, 12 hours after everything started happening, you had 7 different, white hat hackers or on-chain sleuths that we like to call them. Going in and actually doing the tracing of all of the wallet addresses, trying to find and do all that. So, firms like Chainalysis or CipherTrace, really important players to this space. That's when they knew where to look now. They knew, okay, we need to go look at these types of transactions. Now that we know, we've seen the balance sheet, we can now go start doing the investigative work. And lo and behold, now you can see every single entity. You can see every single wallet. You can see every transaction. And now you're going to be able to do a level of, forensics that you would never have been able to do in the traditional world.
Mm-hmm.
And the trick is we need to get to it. And so when piggybacking off you a little bit and kind of where we need to go now where we learn where should we be looking before everything happens.
That's it. And I think nobody wanted to look and nobody felt they needed to look because everybody was making money.
Yep.
Now when the stuff hits the fan, people now are like, well, how do we miss it? You're spot on. And the next wave will be much more due diligence on these products. And I think that if you're trying to invest in crypto or digital assets, let's just talk about digital assets in general, because crypto has such a negative connotation right now.
Yeah, I think we're going to go through a language transition here over the next 2 years.
Exactly. So let's call it digital assets because that sounds a little bit better. But it's going to encompass crypto. It's going to have a lot of other things in it as well. But there's going to be there has to be much more stringent standards for due diligence and to really get deep into the weeds in terms of what it is, what do you own, who is managing it, and what are they doing? And I think those are some of the things that we talked about when we were educating on ETFs. Who's the manager?
Yeah.
What's the exposure? How much does it cost? How are they doing this? What kind of structure is it? Those were 4 of the key questions that we would tell all investors that they need to look at, because not everything is going to be created the same.
Yeah.
So you really have to have I think, another way of things, another thing that needs to happen for certain products to be adopted is that there needs to be much more robust due diligence frameworks created by investors.
Yep.
And when I say investors, I don't mean like, individuals like me and you or mom and pop, but I mean for wealth management firms, for example. These research teams are going to have to build crypto and digital asset framework, just like they built, they had a mutual fund framework. They built an ETF framework. They built an alts framework. Now they're going to have to build a digital asset framework. And that'll be down the road. It's going to be a while.
Yeah.
Because products are brand new right now. There's not a whole lot of them. There's some, but as these products start to come to market more, that's going to generate even more acceptance, I think.
Yeah, absolutely. And I think it's going to rhyme a lot with the ETF industry, I think too, with as time goes on, you get more experiences, more data flow. You can see how they perform in times of stress. Are they defensible? So that we can develop that trust. And the only thing that can get us there is time.
Yeah.
And I think a lot of people, and this is where, we've struggled a lot too, because a lot of people who've come into digital assets over the last 2 years, they see how fast it moves. And so I think they get that behavior mode in where they expect everything to happen fast. And we actually, it's just funny because in 2021, we started our product in, November 2020. And, when we hit the exponential growth in 2021, we were like, man, like, I kind of wish it didn't go up so much. Like we were talking like, gosh, like, why? Can it just calm down a little bit? Like, and it kind of threw on the red flags for us. Like, okay, where is this coming from? Why is it going? And again, just so much speculation. And now we know so much leverage in the space, so much propping up of some big players. And now we've been brought back down.
Yeah.
Now where am I going with this? Basically what I'm trying to say is that slow and steady is going to be just fine. Yeah. And that's okay. And I think that was not in vogue in 2021. And then now all of a sudden everyone wants to talk about risk management. So now we get to showcase how we do that before everyone wanted to talk about it. And I think that's where the players that were doing things, in a responsible way are going to showcase, and they're going to be left. And as much as the pain that we're going through, it's kind of, we need to go through it.
Yeah. Yeah. No, I agree. I agree.
Yeah. So take me through last thing right here before we wrap things up. You mentioned education. We're big on education. It's kind of one of the stalwarts, one of our guiding principles. So if you had 2 things, actually, you know what? Not even 2. One thing that you think everyone should be educated on in digital assets, what would that one thing be?
That's a great question. I think I don't think you can distill it to one thing, because I think there's 2 things. I think number one is I think you need to educate people on how do digital assets play a role in your portfolio. How, I see this as an extension of a alternative sleeve of a portfolio. Over the years, we've gotten away from, just stocks and bonds, right? Now it's stocks, bonds, and alternatives. And those alternatives being, real estate, hedge funds, private equity. Well, now you can add in digital assets in there. So what are the portfolio implications of adding digital assets? How much should you add? How does that impact your risk profile of a portfolio? So I think that's number one. Like, what is the investment case?
Okay.
Right. And it's not just, I'm going to buy Bitcoin and I'm going to sell Bitcoin. I'm going to buy ETH and then I'm going to sell ETH. But putting together a thoughtful product that can add diversification benefits to the client portfolio. So that's number one. So I think then you get people to buy in. Okay, this makes sense
from an investment perspective
of how I can put it into my portfolio. Then I think number 2 is going to be the education around how am I not going to expose myself to unnecessary risk. You're always going to have investment risk, no matter in what you're investing in. There's always investment risk. Even holding cash is investment risk. But how do I get away from the fraud risk?
Yeah.
And I think that's going to be, it's probably more trust than education, but it's a little bit of both.
Education helps build the trust, though.
Exactly. Education helps build the trust.
Yeah, absolutely. That's interesting, because I think if you talk to, maybe this is where we need to, everyone, if whoever's listening to this and is in the industry, maybe we need to switch it, because I think what everyone tries to do and what we currently try to do is they take the technology approach first from an education perspective. So they, what is money? I think that's the most popular. Say, like, where does money even come? Because everyone's like, why do we need Bitcoin, right? The currency, not the network, the currency. And I think that's and so I actually really like that you're taking it the opposite, and maybe it's because you're a financial guy. But the other thing, and I would say I agree, and I think one of the things we're looking at, and I would love to get your thoughts on here real quick, is I think the number one thing I think I've seen had a profound effect on everyone, and where I've gotten people to say just at the end of this conversation, you've been able to explain this in in the last 5 minutes, and I have a better understanding of it now than I did listening to, an hour and a half webinar on crypto. And that one thing is just separating the network from the asset.
Yeah.
Like when you say Bitcoin, like what does that even mean? Like when you say the word Bitcoin, most people have their own definitions of it. There's no agreed upon definition of what Bitcoin is. No one even knows what it is. And so I guess for us, the biggest education piece that I think we've been focusing on is network versus asset.
Yeah.
Not even Bitcoin, not Ethereum, not any of the names or anything. Just what's a network versus an asset? Because I think it also helps them frame up the story of, the Ubers of the world, any business that's been built in the internet that is based on network effects. And network effects, again, is a term coined by another hedge fund who did a lot of work in this space over the last 20 years. So I think I think you're onto something there, where we maybe need to starting with the education on the investment case first.
Yeah, well, I think with the investment case, it also boils down to what are these things?
Exactly. Yeah. I think that's the number one question we get. What am I investing in? So okay, whatever, Aave, whatever coin, or token. What am I investing in when I do that?
Yeah, you're right. And what does that mean? And I think there is some, I think people generally understand, this is what a stock is. This is what a stock does.
Well, I mean,
for the most part,
if you looked at the financial literacy exams that have been given to the general public over the last 10 years, and any academic study has been done, I would actually probably push back on that. Most people know.
Most people know.
They think they know.
They think they know. Yeah. Well, and I think that's what.
And that's not their fault.
Yeah, no, but I think that's what got most people in trouble in all these speculative bubbles. They don't necessarily know what it is that they're investing in. They just know the price goes up and the price goes down, and I can go long and I can go short and I can make money.
Yep.
They don't necessarily understand the fundamental business of Apple, and how much cash flow and the dividend that it kicks off and how that impacts the stock's price. They just look at volatility in the market and they say, well, I can make money on it.
Yep.
Same kind of thing here. You need to understand what are some of these coins, what are the projects, what is the network, how does this all work? And then how does it, and I think the biggest question then when I talk to traditional finance people is how do these things derive their value? And that's going to be a really big question that needs to be answered for more people that are like, I'm crypto curious. I need to know a little bit about this. I need to know more about this, but help me understand, how does it derive its value?
Yeah.
And that's a big question, I think. But that all goes back to that education of what are these, and then why should I invest in them?
Yep.
And then it comes down to the how should I invest in it?
Yeah. And that's where we're hoping to be a big player in that. But man, I feel like we can talk for hours, by the way.
Could, yeah.
But we do have to wrap it up. Thank you for sharing everything. So it sounds like, just to wrap up that kind of what do we need to happen? Like, where do we need to go from here? 1 is regulation, 2 is education, and then 3rd is the trust.
Yeah.
So there you go. But what I like to end off the episodes with are usually like these rapid fire questions.
Okay.
So I'm going to put you on the spot a little bit.
All right.
But I like to get your permission first. So can I put you on the spot a little bit?
Sure.
Okay.
Let's go for it.
Perfect. Okay. So what do digital asset detractors get right?
That's a really good question. That there's a lot of bad actors out there. I think they get that right.
Mm-hmm.
That there's people that don't know necessarily what they're doing.
Mm-hmm.
I think they know what they're doing.
Mm-hmm.
And that there's a lack of trust. I think they get that part right.
Okay.
For now, they're going to be trust rebuilt. I know this is a rapid fire question, but I'm going to give you a little bit longer of an answer.
That's okay. Go ahead.
Because I think that right now they're right that there are actors in this space that shouldn't be here. And that's why I feel there is another flush coming. I have no idea where that's going to be.
Yep.
But there's another flush coming. There are still more shoes. There's still another shoe or shoes that will drop.
Yeah.
Then maybe once that flush comes, once the bad actors are out, then we can start to rebuild. But I think that's maybe where the detractors have gotten it right, because there's still some bad actors out there.
Mm-hmm. Okay. What's a learning that you've taken from your youth to today?
Well, it's less involved in this space, but more in my network.
Okay.
Just staying close to people, maintaining your network,
Mm-hmm.
helping people out. That's as I am a free agent right now, that thing is proving to be very, very, very valuable right now. So.
I love that answer, by the way. I think, a healthy network is a healthy net worth. Someone had a mentor tell me that. And I think it rings true, because it's not even just a healthy network brings, higher, job opportunities, all of those things. But I think also having a healthy network also from a mental health standpoint. Yeah. Having a healthy network in times of, especially when you're in times of distress or times of when you're down, because we're all going to experience, life is not without pain and suffering. And it's not about trying to get rid of the pain and suffering. It's about how do we manage through the pain and suffering to come out better people, more resilient, all of those things. And so a network, whether it's professional, personal, I think is massively huge. So I absolutely love that answer. All right, last question. If you had to give people one resource as they're jumping into the crypto space, what would that one resource be? It could be a book, podcasts.
Your podcast.
Oh,
there you go.
I'll
give you a plug for your podcast right now.
You're too kind.
No, I mean, honestly, just, it just do your own research. That's the thing. The internet's going.
Well, maybe another way I can ask that too. Where did you start?
I started following various feeds on Twitter, honestly. Mm-hmm. And I mean, there's a variety of them. I obviously had to filter it down. Some things just were...
a lot of noise.
That's it. Yeah, that's what I'm looking for. There's a lot of noise, but so I had to, kind of narrow it down and follow reputable sources, and that just kind of get down some of these little rabbit holes, if you will, and that kind of got my interest going more in my education. But I certainly think podcasts and blogs and things like that from reputable sources, that's probably the best area to go.
Mm-hmm. Well, Craig, man, it has been a pleasure. I appreciate you coming here.
Thanks for having
joining me, being the first person here in the studio. I know you're going to land on your feet. You've got so much to bring to the world, not just in the crypto space, but just overall as a human, as a professional. So I'm happy that, to help in any way we can. But for anyone who wants to reach out to you, is it okay if we put, some links in here to your socials?
Yeah.
Can people find you on Twitter? And
I'm on LinkedIn. That's
LinkedIn?
That's the best spot for me. Yeah.
All right, cool. So we'll put your LinkedIn on here. Make sure people get in touch with you if they want to learn more about you, or possibly help you out a little bit.
Yeah.
But man, can't wait to have you back.
Yeah, look forward to it. Thanks a lot for having me.
You're welcome.
This was fun.
All right,
good stuff.
Cheers. We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
We are financial advisors. However, we are not your financial advisor. Unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.
We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
Financial advisor. Unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.